Welcome, everyone. Welcome to today's session. This is Abbas Ali. I'm board member with IIA Oman. Just to introduce myself, I'm working with Bank Dhofar as Deputy Head of Internal Audit. I've been with Bank Dhofar for almost more than 10 years now. Today's session being hosted by me as Mr. Ali Rahman, who is chair of Education Committee for IIA Oman. He had some personal engagement. Today we are very thankful to Mr. Jose for sparing time and joining us for today's session. I would like to take the opportunity to introduce Mr. Jose. Mr. Jose is a partner Forensic Technology Services with Chacko, Oman. Mr. Jose is a professional having over 25 years of experience in consulting and training, especially in anti-fraud and anti-corruption consultancy, economic crime investigations. He is a certified data analyst, ACL certified data analyst, and trainer for data analytics, forensic audit and internal audit. He is also ISO certified anti-bribery expert and master trainer. He is also certified external quality assessor for internal audit activity. He spared time to deliver this session on very critical topic, auditing anti-money laundering compliance. This is very sensitive topic in various aspects. You can be victim of money laundering in dealing with others without having any intentions. This is very critical topic for the countries, for the government, for the institutions, and even the individuals. So if you happen to deal with black money, anybody's transactions, because many countries are putting various sort of sanctions and regulations which where they forbid the transactions. And if you happen to deal with any sanctioned entity, you fell victim to anti-money laundering regulations. So this is a very critical topic in various aspects, not only for banks or financial institutions. There are many other types of institutions, even the production companies, service companies, all are for everyone, even individuals. As I said, this is very critical and sensitive area. Knowing this and auditing this to protect your organizations, to protect the value that organization has created. This is very essential topic. Thank you, Mr. Jose, for this critical topic that you brought to our IIA members. Over to Jose, Mr. Jose, to start the session, please.
Thank you, Mr. Abbas Ali. Good evening, all. Thanks, IIA Oman, for giving me this opportunity. Thank you, Karen, for arranging this session. During the presentation, if you have any doubts or clarifications, please put in the chat box and they will be addressed. Today, we will be looking into how to audit AML CFT compliance. AML CFT denotes anti-money laundering and combating financing of terrorism. So anti-money laundering and terrorism financing is closely associated. Maybe from legal or illegal money will be diverted to terrorism financing, but for money laundering, the proceeds will be always from the illegal activities. such as drug trading, theft, corruption, bribery, and all these things. So we will go through in that, and finally we will look into that how to audit, or what are the aspects to be verified while auditing AML CFT compliance. And before going into deep, we have to think of that why AML CFT enforcements are required. Through money laundering, economic systems are abused. Disturbs the economic stability of country. Wealth will be accumulated in the hands of few people through corruption and bribery. That is why international efforts to bring integrity to financial systems, protecting them from criminal abuse. This will improve the overall market stability and sustainability. Also, international involvement enables standardization of policies and procedures, which creates international industry best practices. I am Jose Chacko, partner, Forensic Technology Services Pro Oman, and presently acting as the president of CFT Oman. I am associated with various types of investigations, including money laundering, fraud, corruption, bribery, and that kind of all the type of economic crimes. So I am here in Oman for the last 25 years, and I'm now presently associated with Pro Oman. To get the basic picture of the extent of money laundering, let us see certain statistics. According to the United Nations, $2 trillion is laundered every year. 2 trillion. 2 trillion is not a small amount, because this many countries, the total GDP of the country will be less than that. So then $2 trillion is laundered every year as per UN. And surprisingly, out of this 2 trillion, only 1% illegal assets or proceeds of crime are confiscated by authorities, which means that a staggering 99% of money laundering goes undetected. When we are talking about money laundering, we are discussing about better controls to reduce the extent of money laundered. In money laundering cases, the involvement or negligence of banks and financial institutions are very clear. That is why continuously banks and financial institutions are getting fines and sanctions from the regulators. You can see the slide. Here we can see this is the data of 2021. 2021 first quarter, second quarter, and third quarter data is here. In first quarter, 17 banks were fined for AML violations all over the world, and $1,250 million fined as penalty. Same thing in the second quarter, 25 banks fined with 722 million, and the third quarter, 12 entities fined with 198 million. On seeing this, we can see that top banks like Bank is fined 700 million, ABN AMRO 574 million, and BitMEX is a Bitcoin exchange. They fined with 100 million. So nowadays, since the technology is working everywhere, virtual currencies also came into picture apart from the trade finances for money laundering. So it will be very difficult without doing a proper audit, without employing the proper automations. It is very difficult to find out the money laundering instances. Today, we will see how to launder money in few instances. First, we will see how credit cards can be used for money laundering. Assume you have 1,000 US dollar to be given to the bank on account of credit card expenditure. Suppose you have 10,000 US dollar in hand, you acquired from the illegal activities like drug trading or something like that. Always, I think this laundered money will come from the predicate offenses. Predicate offenses, we can say that predicate offense is an offense whose proceeds may become the subject of any of the money laundering offense. That means if you are involved in the drug trading or drug mafia, then that money, what you are getting, or bribery and corruption, that is a predicate offense. The money derived from that, it will go to, it has to be money laundered, because tax evasion money you cannot put in the books. So it has to be laundered. So then all money laundering offenses will continue with a predicate offense like that. So here you have to give $1,000 to the bank to settlement of your expenditure, and you have $10,000 of illegal money, the laundered money. What you can do? You can ask, you can structure it, and you can deposit $10,000 to the bank, or you can use smart. You can ask your friends and relatives or persons, ordinary people, to deposit small amounts to the bank to your account. So ultimately, it will accumulate to 10,000. You have to pay only 1,000, but you paid 10,000 to the credit card account. Because since the transaction monitoring limit may be $10,000, that means this, you cannot deposit at one time over $10,000 together. Then the question will come. So all the threshold limits, to avoid that, you will structure it in such a way that the bank will not, or a financial institution will not see that or notice that, and it will be deposited to the bank. And after depositing that money, you will ask the bank, say, in the credit card account, I deposited more money, please give back, return that money. So it is your money, bank has to return that money. So bank has to issue a wire transfer, or bank has to issue a check, or whatever the banking channels it has to issue, it has to repay. So by doing that procedure, or with that process, around $9,000 of black money, laundered money, you put it in the legal systems. So that is the one way of doing things. Then we can see how insurance policies can be used for money laundering. Sometimes insurance companies will issue single premium policies, like that anybody can take 1 million policy. It can be a single premium policy, and since this person will have a lot of contacts and business relations, he must have been relations with many countries. So he will pay the premium, one-time premium, from different countries, through different countries, different sources, this thing to settle this premium. Once the premium is paid, then this insurer, he will tell that he don't want insurance, he don't want cover, please cancel the insurance. Then the insurance company has to cancel that insurance, then he has to return that money. While asking the refund, return or cancellation, the insurance company will normally say that, okay, see, if you are cancelling, we will charge a penalty of maybe 20% or 30% we will charge. But this person will tell, don't worry, I don't have problem because I want money. He don't care because the whatever he's getting 70%, that now it is white. Now it is converted to legal currency, legal tender. So it will come to the person through the banking channel. He has already converted that thing. It may be in the placement stage or in the layering stage or the integration stage. It has already in the legal system. So illegal money or dirty money is converted by taking an insurance policy to a good money. Another instance, what we are normally here, we can see is that suppose you have a 1 real shop or cash transaction businesses like hotels, restaurants, or real shops and all these things. Here, normally when you are noticing, very few people are going, and hardly there may be 200 real or 300 real daily sales will be there. But in fact, this owner used to deposit say 3,000 real every day to the bank or to the account, around 3,000 real. So from where he is getting money? The sales is, we know that it is only 300 real, but as per records, his sales will be 3,000 real. And he will deposit to the bank and it will be converted to the legal tender. So it will be converted to the good money. So that is also one way of doing things. That is why this casinos, car brokerage firms, second-hand car dealers, all these are very prone to money laundering or brokerage, real estate, everywhere. The chances of money laundering is there. Today, we will be looking into the AML basics and anti-money laundering basics and international standards. What are the standards for money laundering? Local regulations, what the local regulations telling. Then we will look into the AML CFT risk assessment. And finally, we will see how to audit AML CFT compliance. So this is the topics we are covering today. When we are looking into the AML basics, what is money laundering? What is shelf and different companies? Basis of terrorist financing, how corporate vehicles will be used for money laundering, stages of money laundering, consequences of money laundering in practice, FATF, blacklist and grey list. These are the few topics we are covering in the basics, AML basics. When we are looking into the definition of money laundering, what is money laundering? Basic element is that money laundering, money is derived from illegal sources. And the second point is that the identity of that money is disguised. That means it will be disguised to multiple channels. So I think when the laundering happens, always the source will be disguised. So that is one requirement. So actually, the money laundering can be defined as the conversion or transfer of property, knowing it is derived from a criminal offense. That is conversion or transfer. So it can be conversion. Second one is the concealment or the acquisition. So knowingly, you know that, okay, this money is coming from illegal sources. Then if you possess that money, then you will also be liable for prosecution. So you are doing or helping money laundering. So you cannot acquire, you cannot possess, or you cannot use it. So you cannot conceal the source, you cannot disguise, and you cannot convert or transfer illegal money to the legal tender. So this is money laundering. Money laundering is laundering means, you know, that washing. The dirty money will be washed to good money. According to FATF means Financial Action Task Force. So Financial Action Task Force is the world's leading or premier institution for making standards for money laundering. For FATF is actually FATF standards are using worldwide. All the countries are using FATF standards for creating their AML laws. According to FATF, the processing of criminal proceeds to disguise their illegal origin. So disguising the illegal origin is required, and it should be illegally obtained assets. If it is a legal asset, you can readily put in the bank or the banking channel. There is no issue. If it is a illegally obtained assets, you have to disguise the illegal origin, and that is the process of money laundering. FATF, we have to say something about FATF. So FATF, as I told, FATF is the world's premier AML CFT standard setting body. So it is giving the FATF standards, and that will be mostly adopted by the every country as their AML laws. FATF Financial Action Task Force was created in 1989 by G7 countries. Today's FATF serves as the premier body promulgating AML guidance to government bodies around the globe. So far, FATF issued 40 recommendations. FATF AML CFT standards are known as recommendations. Whatever standards FATF is issuing, known as recommendations. So FATF recommendations are very important, and 40 recommendations, generally it is known as 40 recommendations. Now there are around 40 countries as members of FATF, and all countries AML regulations are mostly adopted from FATF recommendations. There is FATF and FATF style regional bodies. When we are seeing Oman, Oman is a member of, not a member of FATF, but Oman is a member of MENA FATF. MENA FATF is a FATF style body, and GCC altogether, GCC is a member of FATF. So Gulf Cooperation countries is a member of FATF, and indirectly, then Oman is also a member of FATF, and Oman is a member of the MENA FATF. It is created for the MENA region. Money laundering and terrorist financing is closely associated. Terrorist financing is not always from illegal sources, whereas money laundering is money from illegal sources. Because terrorist financing can be given by companies, countries, even countries can give, and individual wealthy people can contribute, or normal people can contribute. It may not be the money from the illegal sources. It is the good money. But it can be from the illegal sources also. That means terrorism financing can be from membership drive, country-driven financing, or from wealthy people. It can be from legal sources too. What is the consequence of terrorism? You can see the slide. This slide is a post-mortem report of 9/11 incident. It is published by New York Times. So here, this is 2021. This is this terrorist incident has happened in 2001. It is the 20th anniversary of 9/11 attack. 11 September 2001, it happened to be a terrific year on account of terrorism. As per report, terrorist organizations spent less than $500,000 to destroy the World Trade Center and cripple the Pentagon. The terrorist organization spent less than $500,000 to destroy the World Trade Center and cripple the Pentagon. Just see the figure. These organizations spent less than $500,000 to plan and execute 9/11 attack. In a survey by the New York Times, the total cost to US was $3.3 trillion. That is, due to this incident, US lost $3.3 trillion. That means every dollar spent by terrorists to destroy World Trade Center and Pentagon, US lost around $7 million. That means $1 is equal to $7 million. That is the loss to the US. You can assume what is the damage terrorism is making to the society. Apart from that, 9/11 attack caused Afghanistan and Iraq war. You know that. Afghanistan and Iraq war is due after the terrorist attack of 9/11. War costed 1.248 trillion, apart from the lives of 6,200 US soldiers. 6,200 US soldiers gave their life for this war. You know from where it started. It is simply started from a terrorist attack to Pentagon and World Trade Center, and it created a lot of damages to the country. Then all over the world. Then it extended to Afghanistan and Iraq war. It took almost 1.248 trillion for the expenses and 6,000 soldiers' lives. So that is, in short, this is the effect of terrorism. So terrorism and money laundering is closely associated. So we have to do whatever is possible to audit, to bring the systems, to bring the controls to avoid this kind of evils. In a terrorism activity, there will be three components. Terrorists should be there. There should be terrorist organization should be there, and terrorist act should be there. All these three components should join together to do some kind of act. So terrorists are important in this combination. Individual persons or groups may be there, then terrorist organization will be there, and terrorist acts. They have to plan and execute certain acts. So you know this Pablo Escobar is a famous narco trader in South America. You can watch this Narcos. One movie is in Netflix, or it's a drama series in Netflix. That is the life of Pablo Escobar, this guy. He was known as Cocaine King. He was a drug dealer. He was a leader of a drug gang. In the highest of his power, the Medellin cartel dominated the cocaine trade, earning an estimated 420 million a week. So, when this Pablo Escobar was the leader of the Medellin cartel of the drug traders, that's cocaine group, they estimated weekly earnings of this group was 420 million US dollar. You can assume how much trade was happening, how much cocaine was exporting. Okay, then because very interesting story for him. He started as a farmer's son, then a small family, then he started with small crimes. Then he was the world's richest man, because his net worth was around 25 billion US dollar. Okay, so if possible, see the Narcos movie in Netflix. So that will give a lot of ideas, or a lot of how these cartels are working, how the black market is working, or how the money laundering is happening. Everything you can see, because he himself, I think his life is very interesting. He himself, I think, maintained a zoo. And all the animals were imported in the plains where he was used to export the narcotics to US. Then he bring back the animals in that private planes. Then he created a zoo himself. So so it is a big story. So then now we will see how the corporate vehicles will be used for money laundering. If any doubt or clarification required, you can put in the chat. So in the corporate vehicles, because offshore entities are, there are a lot of offshore countries, offshore entities, tax havens, all this will be used for money laundering. There will be shell companies, shelf companies, and friend companies. These are this corporate structure used for money laundering. Shell companies, you know that there is no physical presence will be there. No operations will be there. There will be no economic value will be there. No independent economic value will be there. But shell companies will be there. Some namesake nominee directors will be there, and it will be some of the offshore locations. Then there is shelf companies. Shelf companies is that there is shelf companies also, there is no business activity after incorporation. It will be incorporated as a normal company. Then there will not be any activity. Then it will be put in the shelf to age. Then these companies will be sold to whoever wants the companies. It will be sold, shelf companies. Then that formation will be done and kept as in the shelf, and it will be given to people who wants that company to money laundering. Then another category is that the friend company. Friend company is that friend companies, there will not be very little activity and limited or no own operations, but it will belongs to a group of company, and this will work as a friend company for activities. It will be always associated with a group. It will protect the parent corporation or brand or organization by doing business in their name, friend company. So they are definitely, they are not the actual beneficial owners for the activities. There will be beneficial owners, or there will be a parent company, and that is a structure created like that: friend company, shelf company, and shelf companies. These are the corporate vehicles used for money laundering. So when the corporate vehicles can be used for money laundering, like multi-jurisdictional structures, companies will be formed, or different structures will be formed in different geographies. That is one way. This before we have seen this the one of the bank that fined last year, or biggest bank fined for money laundering. They have purchased an offshore, one of the contracting company fined for money laundering. They have purchased a bank itself in the offshore entity in Bahamas or something. Then they were doing a lot of money laundering activity in that, or bribery activities through that. So that kind of things, that because entities will be created in multi-jurisdictional structures or different geographies, then they will form intermediaries and professionals. There will be intermediaries and professionals, means lawyers, chartered accountants, auditors, or trustees will be created. So intermediaries, these lawyers will create companies for their clients, and they will handle the affairs. Then law enforcement or the regulators will never know that for whom these people are doing business, because this beneficiary will be always, it will be hiding behind something, and this intermediaries like lawyers, auditors, trustees will act as the intermediaries, and they will act on behalf of the real launderers. Then, of course, shell companies, I told you, shell companies will be created in the offshore. Normally, it is in the offshore locations, and it will act. So then we have nominees, because in when we are appointing the nominees, the problem is that nominees will be just nominees. Beneficial owners will be totally different. So in a money laundering instance, when the investigation is going on, it is very important to find out who is the beneficiary of this act, or this laundered funds. Who is the beneficiary, or who is the beneficiary of this asset? Then only we can know that what kind of activities happened. Now we can look into the classical stage of money laundering. In the classical stage of classically, we can say that in money laundering, the placement, layering, and integration will be the stages, but it is not definite stages, and it is not necessary that in all money laundering instances these three stages should be there. It is not required. So placement, layering, and integration, that is the classical stage, because as a theoretical we can say that these are the stages, and always the stages, placement and layering and integration, will be interrelated, maybe overlapped. It will be one, see, placement, what is happening in the placement stage, placement of funds into the financial systems. Suppose the placement can happen in many ways. You can ask maybe 10 people to place funds in your account, funds in your bank account. So that way placement can happen. Or as I told you, you can put through a casinos, you can put through real shops, or you can put to second-hand car dealer, or anywhere where, or in restaurants, you can put the money into the system. So placement, the first stage of is the placement stage. So law enforcement can do something on this this stage mainly because this is visible. Who is placing the money? Who is doing that? So to avoid the visibility, the people will be structured in such a way that it will not be noticed by the police. So it will be structured in such a way. For example, in a casino, normally, you know, the casinos, what will happen normally, because somebody will in casinos there are some when the US police raided one casino, it has recorded what is happening there, because there we can see that people are coming with big tennis bags, you know, sacks of bags, sacks with a lot of money, the currency inside in that, to the casinos, and they will bring with a liquid cash to the casinos, and they will buy the casino tickets or coins, small coins, and they will play there, maybe one or two games they will play. Then finally they will ask to the counter that say, okay, I stopped the play, so give me back the money. They have to return that money, and normally casinos cannot return that money in cash, so they will issue a check. So this, whatever black money is there, whatever illegal currency is there, that will be converted into the good money. So that is, the placement is happening like that. Then it is the second stage is the layering stage. Layering of transaction to disguise the source, ownership, and location of the funds. Layering of transaction, that means from account to account, country to country, or one insurance policy, one policy to another. A lot of layering will happen. Layering means it will hide, disguise the ownership. So it will layer into various things. Then after the layering happens, it is very difficult to find out the source of those funds. So that is why we are saying that in the placement stage, it is mostly police can do something. The layering stage, it is very difficult to find out, because once the layering happens, it is very difficult to find the source. Then finally, the integration stage. Integration stage is the funds coming back to the society. That means once the black money is placed in the financial system, that is a difficult stage. Then it will be laid into various products, multi-products or multi-banks or multi-countries. It will be transferred. Then it will be integrated back to the system. So the original owner of that money, he will receive the money now in the form of, maybe he will buy a luxury building, he will buy a luxury ship, or he will buy something very costly, jewelry, everything, or art piece, he can buy that. Then he can sell those articles because he purchased with the good money. So then he can, then it is already laundered. Then he already cleaned the money. So that is the various stages of money laundering: placement, layering, and integration. Placement, layering, and integration. So please remember this. So normally in our daily life, the money laundering verification, we start with the KYC screening. KYC is you know that it is know your customer. Know your customer screening for AML CFT. That is the starting point. So when you get a customer, the company has to do a KYC screening. What is KYC? Because usually Oman or banks, always they will ask you, bring your resident card, bring your passports, or whenever it is renewed, give a renewed copy. All this is happening because they have to comply with the KYC requirement. KYC requirement because bank should know who their customer is. That like that every company should know that who is their customer. So in the KYC screening, what all things are checking? KYC screening, it is high risk businesses. There are certain high risk businesses are there. Normally there will be regulatory authority watch list will be there for illegal MSPs, the money transfer businesses, registered casinos, then adverse media database. There are a lot of restricted businesses will be there, or the high risk businesses that is prone to AML CFT, that is high risk businesses. So that will be scanned. Then sanction and terrorist list, because whenever there is a regulatory violations are there, or standard violations are there, then it will be sanctioned. Each country will be sanctioned. So, for example, sometimes Iran will be sanctioned, sometimes Pakistan will be sanctioned, and it will be included in the terrorist list. Or if the country is associated, or if some persons are associated with some terrorist organizations, that will be sanctioned group. So that will be verified in the KYC. Then we have to check politically exposed persons. Politically exposed persons means the persons who are in the higher positions of the government. That are they are the politically exposed persons. Why these people are used for the scanning? Because these people, politically exposed persons, they are in the higher positions, like in the senior administrative positions of the governments. They will be influential people. They can do corruption, and they are prone to corruption. That is why they are also being scanned. So politically exposed persons also be scanned. In the screening software, these kind of things will be there. Then criminal and no-fly list will be there. Each country, each country will issue criminal list. So that criminal list will be there. Then no-fly list will be there. That means flying restrictions. No-fly list will be there. Normally, it is not a CFL list. So the criminal list, no-fly list, this is normally issued by countries. Then adverse media list will be there. That is, if any negative media coverage is there, that will be screened. If continuously, if some corruption is happening, some instance is happening in a company, then that news will come in the media, and that system will capture it. So in the KYC screening software, now everything is automated, and it is artificial intelligence is used in this, robotics is used for the screening. And in that, these are the areas where screening is happening: high risk businesses, sanction and terrorist list, politically exposed persons, criminal and no-fly list, adverse media list. And if the bank or company or country can create their own list also. And because maybe some banks will list certain people as they don't want to deal with those people, or they want to put it as in the cautious list. So then there will be a separate list for them. That also will part of the KYC screening. Then one more term we need to use is that in the everywhere you can see that not tipping off. Not tipping off means if as a investigator or if as a compliance officer, if or whatever be the position is not important. If you came to know that this person, the case is under investigation, or the police is asked for some investigation, or police is asked for some details, you are not supposed to disclose this information to that client or that person. So if you are doing that, then it will be considered as tipping off, and then you will be punishable. So that is also, you should be very careful, because as a compliance officer, you will know that, okay, this instance is a suspicious transaction and I need to report to the police. Or sometimes police will ask you, or law enforcement will ask you, or give the details of this customer. So the customer should not know that. If it is doing, and if it is evidence, then the person who is tipping off will be punishable. That is Article 49 of the Oman law also telling that. Then when we are discussing about the KYC screening, normally when we have to do the due diligence, because due diligence has to be done for customers, when we have to do that, first of all, before establishing a business relationship, we have to do a KYC screening and due diligence. We should know from where this customer is coming, what is his background, what is his address, what is the passport number, or what are some details, from where he is bringing the money. This kind of details you should know. So before establishing a business relationship, you should know that. Then before carrying out a transaction for a customer, because if the customer is coming with a large chunk of money and asking to do a transaction, then you have to inquire about that. From where you are getting this money? From where? What is the source? So normally this money exchanges and the banks will ask you. Then before carrying out a wire transfer for a customer, if the customer asks for a wire transfer, you should ask, you have to do a due diligence for that. Also, when there is a doubts about a customer, the customer's integrity, you have to do the due diligence. So these are the things with regard to the due diligence aspects. Now we can go to the international standards. Ali, Abbas, it is going okay?
Yes, Mr. Jose, please carry on. It's going fine.
Yeah, okay. So we will look into the international standards. What are coming under the international standards? Organization and standard setters. Normally, we know that we already discussed FATF, Financial Action Task Force. So they are the premier international body. Then there are other bodies like World Bank, IMF, and all these things they're giving the standards, some kind of guidance they are giving. Even Boots or Goof, they are giving some standards. Then we have the US, certain important US regulations are there. Then for the European Union countries, there is EU regulations are there. European Union regulations are there. Normally, these are the major international standards. So FATF and MENA FATF, I told, FATF is the standard settler for all world. Then MENA FATF is a FATF style regional body. All the MENA countries, Middle East and North African countries are members of that MENA FATF. Then GCC is a member of the FATF, and as you know, Oman is a member of GCC, and indirectly Oman is a member of the FATF. And when we are looking to the FATF, this thing, Financial Action Task Force, they are the global watchdog, and they have issued 40 standards, and it is popularly known as 40 recommendations. Normally, all countries, even Sultanate of Oman, has issued the anti-money laundering law. It is based on the FATF recommendations, 40 recommendations. But one thing we need to notice that FATF recommendations do not have the force of law. That means it is standards only. So it is the countries can adopt it or not to adopt it. There is an option to adopt it, not to adopt it. So, but when the country issues a law, because based on the FATF 40 recommendations, suppose Oman issued a anti-money laundering law, then it is a law. It is a royal decree. So then it has a force of law. But FATF recommendations, as it is, they don't have a force of law. Then we are looking into the major US regulations. US regulations, mainly it is Bank Secrecy Act is there. That is from 1970 onwards, it is Bank Secrecy Act is there. That actually Bank Secrecy Act is telling you are not supposed to disclose the customers' details to others. So that is basically that is the law. Then Money Laundering Control Act is there. Then 1986 they brought Money Laundering Control Act. Then 1989 FATF issued the 40 recommendations. FATF came into existence and issued the 40 recommendations. In 2001, after the 9/11 incident, terrorist attack, US issued USA Patriot Act. That is basically to block terrorism financing. So these are the major US regulations with regard to AML CFT. So when we are looking into the international regulations, this is very important. Then we are looking to the major European Union regulations for AML CFT is that European Union regulations, normally it is known as directives. That is money laundering directives, EU money laundering directives. So EU money laundering directives, it is from when we are taking to 91 to 2005, they issued 3 directives, that is first to third MU directives. Then in 2017, European Union Parliament issued 4th money laundering directive, and 2018, 5th money laundering directive is issued. So, but when we are issuing directives, this is issued by the European Parliament. This is actually, it is laws. It is mandatorily European countries has to obeyed by the law. That is, it is a rule, it is a law. So FATF, the standards are not mandatory, not obeyed by the law. US laws are laws, and European directives are also laws. So now we move to, anyway, before that, we will see what is blacklist and grey list. Actually, the FATF classifies certain countries as blacklist countries and certain countries as grey list countries. So presently, as per the 2020 list, only 2 countries were on the FATF blacklist, that is North Korea and Iran. So it is, we can say that it is a sanctioned country, North Korea and Iran. So that means there is trade embargoes will be there. There will be a lot of embargoes will be there. So it is Fatah is classified as blacklisted countries. Then what is the effect? Because the world IMF will not finance them, or the world finances will not come to that country, world assistance will not come to that country, or when some country wants to establish relations with that country, this will treat as a risk. So this is so North Korea and Iran is presently under the list of blacklisted countries. So that means there are some serious deficiencies are there in their standards. Maybe they are not members of the Fatah and they are not listening to Fatah, or there are serious deficiencies are there. In the grey list, where it is now, there are almost I think 24 countries are there in the grey list, and it is once it is listed in the grey list, that means the country has committed to resolve swiftly to identify strategic deficiencies. There is strategic deficiencies with regard to money laundering and terrorist financing, but they agreed to rectify that. So they are under increased monitoring. This list is often externally referred to as the grey list. So this list is called, so there are deficiencies and they agree to resolve that, and they are under increased monitoring. This is called grey list. So now Alabama, Pakistan, Botswana, Cambodia, Cayman Islands, Haiti, so many, Panama, Philippines, so many countries are there, 24 countries are there.
Excuse me, Mr. Jose.
Yeah.
Just to remind our participants that if you have any questions, you can raise hand for asking the question, or you can just type in the chat box. Mr. Jose, I have a question for you.
Yeah.
Basically, earlier you mentioned that it's the choice of the country whether they want to comply with FATF or they don't want to comply with FATF. It's a recommendation only.
Yeah.
But the way they maintain the blacklist and the grey list seems there is no choice at all. Every country has to comply.
Yeah, because FATF is not a legal entity. It is an association of G7 countries. So it is the countries are the members, because they are it is not a law enforcing agency. That is why we are telling that it is a standards. That standards can be adopted or not adopted, but if you are not adopting, in effect, you will be blacklisted or grey listed. So in fact, it should be done, but it is not mandated. But when it is coming to the country law, it is mandated. And almost, I think, all the clauses of FATF will be in all the countries' laws. It will be there. Okay.
Thank you.
Okay. Now we can come to the local regulation. What the local regulations are telling. So when it is coming to the local regulations, Oman money laundering law is Royal Decree number 30/2016. Royal Decree number 30/2016. As per Financial Action Task Force and Oman and money laundering law, the following entities will come under the purview of the law. So when we look into the legal framework of Sultanate of Oman with regard to AML CFT, the important enactment is Royal Decree number 30/2016. When we are looking into the applicability, it is applicable to financial institutions as one segment, and second is non-financial institutions and professions as another segment. So Article 3 is talking about financial institution, and Article 4 is talking about non-financial institutions and professions. As per Article 3, financial companies are included, which includes banking, financial or exchange company, leasing companies, etc. Article 4, non-financial institutions and professions are financial services company, dealers in precious metals and stones, notary public, law firms, accounting firm, lawyers, accountants, auditors, companies who manages bank accounts like managers of funds, then officers helping to establish and operate, manage companies, any other arrangement or provisions determined by the committee, because there is a national committee is there, that is the supreme authority here for AML. So that national committee can designate any organization as a entity coming under the law. Any charities or religious organizations, not for profit, also coming under this law. So this is the structure of the Oman Royal Decree 30/2016. So here almost all the entities are covered. In the non-financial sectors, it is covered the real estate brokers, agents, precious metal, stones, jewelry, everything will be covering. Now, you know that now there is the ministry has established money laundering department. Even CMA has established a money laundering department. Before, only in the banks it was there. That means the government is seeing this money laundering aspects very seriously, and the law enforcement is coming into picture. So now it is applicable to all real estate, jewelries, attorneys, notary public, accountants, auditors, law firms, real estate agents, car dealers, everywhere it is coming. Banks and financial institutions, already it is there. And you know that every banks or financial institutions having the compliance officer. But in other organizations also soon or later, this compliance officer or somebody responsible for compliance should be there. So this non-financial institutions and professions are normally known as DNFBP, that is designated non-financial business and professions. Designated non-financial business and professions. So this word also keep in mind, DNFBP. Sometimes it will come like that, DNFBP, that is designated non-financial business and professions. Also in Oman, the committee, as per the law, the committee is the national, wherever the committee is mentioned, there's a national committee for combating money laundering and terrorism financing. This consists of the people from the ROP, then central bank president, the CMA president, all these things are coming in the committee. Then customs. The chairman is the chairman of the committee. The center is the National Center for Financial Information. In Oman, the controlling body for money laundering and terrorism financing is known as the NCFI, National Center for Financial Information. National Center for Financial Information. It was located in Quram. Okay. Then there are various supervisory authorities as per the law. There is Ministry of Justice, Ministry of Commerce and Industry, Ministry of Housing, Ministry of Social Development, Central Bank of Oman, Capital Market Authority, or any other party designated by the committee. In addition to the above, this apart from the law, the Central Bank of Oman issued certain guidelines. Capital Market Authority already issued 2-3 guidance on that. with regard to the insurance companies, with regard to the securities companies, and all these things with regard to money laundering. So these are the regulations or the guidance note, and this has to be, we have to follow. So this supervisory authorities can issue guidance and regulations to combat money laundering and terrorism financing. They have powers as per Act to issue guidance note and directives to the entities, the controlling entities. Then I told you that the reporting entity here is the NCFI. Before that, we need to see that suspicious transaction report. What is suspicious transaction report? If as a compliance officer, as a company, if you feel that any of the transaction is a suspicious money laundering or terrorist financing activity, then you have to raise an STR. STR is a suspicious transaction report. So suspicious activity report. You have to raise a suspicious transaction report to whom your entity has to raise, or compliance officer has to raise the suspicious transaction report to the NCFI, National Center for Financial Information. Then the NCFI will validate that information and scrutinize that information, and then if it is required, they will intimate to the law enforcement, public prosecutor, and public prosecutor will take over from that stage. So that is the flow of the STR. STR will raise from the company and it will go to the NCFI, and then it will go to the law enforcement. So as per Royal Decree number 30/2016, if any STR is there, inform the sender, that is NCFI, without any delay, information related to the suspicious activity that may be related to money laundering or any corruption, or its predicate offense, or terrorism financing. Provide the National Center for Financial Information with the data, information, and statistics required to carry out its duties. It will do the preliminary investigation and it will transfer to the public prosecution. So when it is coming to the risk management, because in the FATF guidelines, regulations, and also in the Oman money laundering law, it is clearly it is mentioned what is to be done in the AML, effective AML program, how to conduct that. First of all, AML risk assessment should be done on the organizational environment, because that organizational environment, that is the always it is said that organizational culture should be there for the implementing the laws, okay, regulations. Then we have to do a AML risk assessment. That risk assessment will be based on the country risk, also enterprise-wide risk, or the all the risk will be considered. Enterprise-wide risk will be considered to carry out the AML risk assessment. Then it will take the organizational measures to mitigate the risk. This is the flow actually. So when this is done, there should be a culture should be there, organization environment should be made, then proper AML risk assessment should be done. Then it should be organizational measures to counter or mitigate the risk. Then we can say that it is we are carrying out our obligations. If we are not doing, the Act is clearly saying that regulatory, reputation and legal consequences will be there. That will be regulatory action will be there, reputation problem will be there, and legal consequences, fines will be there. So implementing the 4 pillars of an effective AML program, when we are doing the AML program, there are 4 points, only 4 points we need to see. As an auditor, what are the points to be audited? How to audit AML compliance? This is very simple. First of all, we have to check whether proper policy, procedure and controls are there existing in the company. Okay, if proper policies, procedure and controls are there, then second point we need to check is that whether there is a compliance officer. So it is not necessary that there should be a particular compliance officer, designated compliance officer, but there should be a designated person responsible for the compliance should be there. Maybe he can be a finance manager, so he can be a designated compliance officer for the company. So he can do the AML function. Okay, so first of all, there should be policy procedure, then compliance function should be there, then independent audit should be there. It should be audited independently, internally or externally. It should be independently, it should be done. And it should see that it is not violating any laws. It is as per the FATF standards and the country law. Then employee training program. The employee training program should be a continuous one, or not only on the onboarding program. It should be a continuous program, especially in the counter staff, persons facing the customers. It should be a continuous one. All the employees should be continuously trained for AML. So these are the 4 requirements. As an auditor, you have to see whether policies are there, where the compliance function is there, whether there is independent audit is carrying out, or the employee training is there. Then, like other risk assessment, here also, the risk can be either 5-tier or 3-tier or whatever way you can define your risk. You can define your risk as per your risk appetite. You can as per your enterprise risk management. So it can be high risk, low risk, or medium risk. Or there is one category also there, that is the restricted, that will come here as a restricted entities, restricted risk. That means if some of the activities is totally restricted, totally prohibited, that the company is not supposed to do that, take up that activity. That is restricted activity. For example, if the company wants to trade with some of the sanctioned country or one of the terrorist organization, that is a restricted list, because as per the sanction, it is a restricted list. So you cannot do that. So there is one category called restricted list. Otherwise, you can classify the risk into high risk, low risk, moderate risk, or low to moderate, 5-tier or 3-tier. You can prepare the risk metric as per your convenience. This prohibited category is the restricted category. So you know that then risk assessment frequency also you have to decide as per the risk metrics. You have to some high risk category risk. Maybe you can say that every 6 months or every year you have to carry out the due diligence. In the medium risk, you can say that every 2 years. Low risk, you can say that every 3 years. So that period, everything you can fix. So that is about the high risk, how to do the risk assessment. This is just like any other risk assessment, but always it is country, product, ownership, negative media alerts, PEP category, related parties, restricted party. All this will be considered for while giving the grades for the risk assessment. Then we look into the types of due diligence. There are 3 types of due diligence. That is simplified due diligence. That is, if it is a low risk customer, you can do the simplified due diligence. You can take the minimum identity documents and you can do that. And the standard customer due diligence is CDD, that is the normally applicable. Then for the PEP and the high risk category, you have to do the enhanced due diligence, CDD. So whenever there is a high risk category, you have to do the EDD, enhanced due diligence. Otherwise, the standard due diligence, that is the CDD. And if it's a very low risk, you can go with the simplified due diligence. So now we know that what are the elements to be audited. You have to see AML CFT policies and procedures are in place. Is there a designated compliance officer? Is the risk assessment done? Is there a periodical verification? And always throughout the process, you have to watch whether you have a reasonable knowledge that your client is converting, concealing, or acquiring illegal money. In the process of placement, layering, and integration, you know that classical stages of money laundering is placement, layering, and integration. And you have to verify that do you have reasonable grounds to believe that this particular customer is converting, concealing, or acquiring illegal money in the stages of placement, layering, or integration. If it is there, there will be a STR, suspicious transaction report, and it should be reported to the NCFI. So this is in short. It is you have to see the written policies are there, independent review, designated compliance officer, and ongoing training. Thank you very much. And this is from me today. And if any clarification required, I'm available, or you can put some clarification. Abbas, thank you very much.
Yes, please. Thank you.